Committee will come to order. Good morning, and thank you for being here. The Troubled Asset Relief Program, known as TARP, has evolved into a program of unprecedented scope, scale, and complexity. TARP funds are being used in connection with 12 separate programs, under which Treasury has already committed $643 billion and spent $441 billion. Today we will hear from the Special Inspector General for TARP, Neil Barofsky. As he presents his quarterly report to Congress, his findings, quite frankly, are astonishing. According to the IG, the TARP has become a program in which taxpayers, number one, are not being told that TARP recipients are doing what TARP recipients are doing with their money. Number two, have not been told what their investments are worth. And number three, will not be told the full details of how their money is being invested. He found that even though Treasury receives monthly reports on the value of TARP investments, it will not make that information public. Incredibly, the Treasury Department has taken the position that it will not even ask TARP recipients what they are doing with the taxpayers' money. In short, the taxpayers now have a $700 billion spending program that's being run under the philosophy of don't ask, don't tell. However, the committee has been asking a lot of questions about last fall's financial meltdown and its consequences. And the key question is this: are these programs being run for the benefit of the American taxpayers who are funding them, or for the benefit of Wall Street? That's a question. Without more transparency in these programs, we cannot answer that question for sure, but what we have learned from the IG is not encouraging. Treasury has hired 9 private firms to be asset managers for the public-private investment program. All of these large firms are engaged in extensive private investment activities. According to the Special IG, this arrangement is vulnerable to conflicts of interest, collusion, and money laundering. Yet Treasury is allowing these firms to share information between employees who make investment decisions on behalf of the government and those who manage private funds. This arrangement is further indication that federal financial regulation is a bit too cozy with Wall Street. Meanwhile, lending to American businesses and consumers remain weak. Some firms claim to have used TARP funds to increase lending, but others have used it to acquire other businesses or show up their own balance sheets and then award bonuses to employees. There is no evidence that Treasury has made any attempt to determine whether TARP funding has resulted in increased lending and whether that has had any effect on reducing unemployment. I also want to voice my deep concern over recent news that Treasury has requested a legal opinion from the Department of Justice challenging the Special Inspector General's independence. Congress would not have established a Special Inspector General to oversee the TARP if all we wanted was a yes man or yes woman that Treasury could ignore. It is critical that oversight investigations and audits of TARP remains unencumbered. Congress may have given Treasury some leeway when it comes to the TARP, but we didn't give them a blank check. The problem is we can't even say whether the TARP programs are working or not, because the information that would allow Congress and the taxpayers to analyze whether they are getting a good return on their investments has not been made available. I hope today's hearing and the Special IG's report will be a wake-up call to the Treasury and the Fed that our financial system cannot be run behind closed doors. Again, I want to thank Mr. Barofsky for appearing today, and I look forward to his testimony. At this time, I yield time to the ranking member from the great state of California, Congressman Issa.
Thank you, Mr. Chairman, and thank you again for this vigorous oversight. As you have said so often, all we ask for is transparency. Today we'll hear that all we're not getting is transparency. Mr. Chairman, because I'm going to include them in my opening statement, I'd like to ask unanimous consent that 3 pieces be put in the record. The first, Mr. Chairman, is your letter to Tim Geithner asking that he specifically include the recommendations of the Special IG, something which I'm not sure there's an answer, but it's from February 5th. The second is today's New York Times, that says, big estimate worth little on bailout. I suspect that will be referred to many times today. And the third, because it is related to TARP and to a case recently settled against the government, I have a letter in response to a letter from myself, in which the Chairman's been copied, from Maurice Hank Greenberg, concerning his continued willingness to arbitrate rather than to litigate the disputes which so far he's been winning.
Without objection, so ordered.
Thank you, Mr. Chairman. Today we're going to hear about a $23.7 trillion figure related to the TARP. Additionally, we're going to hear that the full transparency which we asked for, which this President and this administration has promised, is being blocked by the bureaucracy that often seems to say, just trust us and we will deliver. Now, just trust us and we will deliver, quite frankly, and I'm not making the comparison except for the purpose of people understanding why we can't trust, Bernie Madoff said, trust us, we have high returns. The fact is, Treasury is saying, trust us, you really don't have $23.7 trillion at risk. As a matter of fact, effectively they're saying the only thing that's at risk is a fraction of the $700 billion that we've committed. Mr. Chairman, nothing could be further from the truth. Over my decades in business, one thing I learned was insurance policies cost money because the amount insured is in fact at risk. Anyone who thinks that we mark to market assets to half of their original value with some regularity when they include toxic assets and written down homes, and then believes that there would be no risk in guaranteeing those, particularly Freddie and Fannie and other guarantees that are out there, is simply living in a dream world. If we underwrite in various forms over $23 trillion, we will in fact have losses. There are no gains for all practical purposes in these assurances, so they're not offset by profits. In the case of the TARP directly, and I know we're going to hear from the Special IG today, there will be some good news. There already has been some return and some profit on monies extended in the TARP. That is not so of many of our guarantees. Most of our guarantees are in fact insurance without cost to both profit and nonprofit organizations. Mr. Chairman, I believe that this administration desperately wants the kinds of transparency that will allow us to uncover potential insider trading, cozy relationships between part of a trading organization which is trading for the government and part which is trading for itself. And I believe only through our vigorous oversight will this administration be able to create the kind of a sandwich where on one side is the President asking for transparency, on the other side is the Congress demanding it, and in the middle is the IG trying to overcome a bureaucracy that has always been able to outlast administrations and chairmanships. Mr. Chairman, today we have to make sure that this Special IG goes back with the clear message: Congress will not be outlasted, and our patience is running out for the transparency promised by the administration, promised by the Congress, and not yet delivered by the people who transcend administrations one after another. Mr. Chairman, I look forward to the testimony of the Special IG, and I commend you for continuing this vigorous oversight and yield back the balance of my time.
Thank you very much. Thank the gentleman for his statement. We will now turn to our first and only witness, Mr. Neil Barofsky. It is long-standing policy that we swear all of our witnesses in. Will you please stand and raise your right hand? Do you solemnly swear to tell the truth and nothing but the truth?
I do.
Let the record reflect that the witness answered in the affirmative. is the Special Inspector General for the Troubled Asset Relief Program, TARP. Prior to assuming this position on December 15, 2008, Mr. Barofsky was a federal prosecutor in the United States Attorney's Office for the Southern District of New York for more than 8 years. In that office, Mr. Barofsky was a senior trial counsel and headed the mortgage fraud group, which investigated and prosecuted cases of mortgage fraud, and also cases of securities fraud with respect to collateralized debt obligations. Notably, Mr. Barofsky led the broad investigation into the $55 trillion credit default swap market and is a recipient of the Attorney General's John Marshall Award for his work. We welcome you, Mr. Barofsky. You allowed as much time as you may consume. We generally give people 5 minutes. We thought about giving you 10 minutes, but then I thought about the importance of it, and I said as much time as you may consume, but try to stay within 10 minutes.
I will, and thank you, Mr. Chairman. Mr. Chairman, Ranking Member Issa, members of the committee, it is an honor and privilege to appear before you today and present to you our quarterly report to Congress. In my testimony, I'd like to outline what is contained in our quarterly report, section by section, going over some of the highlights. In Section 2 of our report, we do as we do in each of our quarterly reports to summarize what has happened in the last 3 months in the TARP. And this has been a busy quarter for the TARP. We've seen the expansion of several programs, the bankruptcy of General Motors and Chrysler and the extraordinary government support of those industries, the expansion of the mortgage modification program with the selection of servicers and the allocation of approximately $18 billion in support of that program. We've seen paybacks of TARP money, more than $70 billion for capital purchase program recipients, and the launch of the public-private investment program with the selection of 9 asset managers and the commitment to provide up to $30 billion of taxpayer funds to fund that program. And that's all laid out in Section 2. In Section 3, we've attempted to put the TARP program in context. Originally started as a $700 billion program to purchase toxic assets from financial institutions, the TARP has expanded to 12 separate programs involving up to $3 trillion. But it doesn't stand alone in the support of the financial system from the federal government. Since 2007, more than 50 different programs from different agencies have been announced, instituted, and implemented. And a lot of what we've seen when hearing about TARP recipients and their participation is that it's not alone. A bank may have an investment from the TARP, but also participate or issue debt with an FDIC guarantee or borrow money from the Federal Reserve. And there are so many numbers flying around that we thought, to further the goal of transparency, we wanted to put the TARP in the necessary context of these other programs. And that's what we've done in Section 3. And for each of the 50 programs, we put out 3 different numbers. 1, the amount of money that is currently outstanding on each of those programs, which is about $3 trillion. 2, the high water mark from their inception until January 30th, 2009, which is about $4.7 trillion. And the third number, which is what the total exposure, if each of these programs were fully subscribed to, each of the insurance contracts were used, all of the different programs were, and all the support in total, and that number totals $23.7 trillion. Now, since we've issued this report, there's been some harsh criticism coming from Treasury. I've seen some public statements that attack the numbers in our report as being inflated. One press comment said that a Treasury spokesman described them as ridiculous. We take offense with that. I think that if you look at the report and in context, it's very clear where these numbers came from. They came from the government itself. These are all open source, public source information. This is from the websites of the Treasury and the Federal Reserve, submissions to Congress. If the numbers are inflated, then it was the government itself that inflated them, not us. Secondly, as far as the suggestion that we are trying to shock and awe with this number, again, I think that we've made very clear in this report in black and white what this number means. We explain that this number involves programs that, yes, have terminated. We explain that that some of these numbers are collateralized, that there is collateral. All that is set forth in black and white. But one thing that is very clear, the number is basically just the accumulation of what these 50 separate programs are and what the total amount of financial support that the government has committed to. Frankly, what this attack is a challenge to the basic transparency that we try to provide in this report so that members of Congress and members of the public understand in total what is going on as part of the government's support of the financial system in this crisis. And that brings us to our next section, Section 5 of the report, where we talk about our recommendations. And one of our primary recommendations brings us to the same issue of transparency. We've now been in existence for 7 months, my office, and over those 7 months we've been pushing, really from my 8th day in my office when I made the first recommendation, to push for greater and greater transparency. That recommendation is one that we continue to make today, which is Treasury requiring TARP recipients to report on how they're using the money. Treasury has repeatedly refused to adopt this recommendation, and as a result, in February, we sent out letters to each and every financial institution to ask them directly to report to us to prove that that they can provide meaningful information, that there is a purpose to requiring banks to account for their use of funds. Yesterday, we issued that audit result, and the evidence is as we suspected. Contrary to Treasury suggestions, banks can and should be required to report on how they're using funds. Banks reported a variety of different uses, aside from just lending, as the Chairman noted, to acquire other financial institutions, to make investments in mortgage-backed securities, to pay down debt, all different forms of use of funds that can and should be verified and can be part of the basic transparency of the TARP program. As we noted in our recommendations, this is not the only recommendation regarding transparency that has not been adopted. We set 4 different recommendations, including those related to basic concepts, so taxpayers can know what the value of the assets that they are the chief investors for. Treasury receives monthly reports on those valuation estimates, but will not share them with the public. And we too think that too is a failure of transparency. Similarly, we have recommendations related to the TARP program and the public-private investment program. Basic concept of transparency. So 1, the taxpayers can know what's going on with their investments, and 2, the watchful eyes, as has been famously quoted, sunshine is the best disinfectant, and it will discourage and deter bad behavior. In Section 1 of our report, we talk about what we've been doing for the past 3 months, building our audit and investigations divisions. We're concluding 6 audits this quarter. We've announced or about to announce 5 separate audits. We talk about that. Our investigations division is continuing. We have 35 open criminal investigations, and we will continue to strive forward with bringing greater transparency to this program. Mr. Chairman, Ranking Member Issa, it is again a privilege to be here today to present this report, which we believe is an essential part of continued transparency. We've had more than 12 million hits to our website since we've started, with almost 700,000 downloads of our previous reports. And I think that we act in deed as in word to bring this necessary transparency. And I thank you for your indulgence on time, and I look forward to answering any questions you may have.
Thank you very much. We really appreciate your being here. I understand that Treasury collects monthly data showing the value of its TARP portfolio. Is there any reason why that should not be made public?
In our view, absent some maybe very, very limited circumstances, we believe it should be made public. The one of the arguments that was offered against doing this was that it may impinge Treasury's ability to liquidate some of those assets. But frankly, we think that just like any asset manager, any mutual fund, the investors have a right to know what the value of their assets are. Frankly, the one good example of when you don't know is Ranking Member Issa's example of a Madoff-type hedge fund where investors can't see what's behind the numbers. And we think this is an essential part of transparency.
Right. We are concerned about conflict of interest. Treasury hired 9 private firms to be asset managers for the TARP public-private investment program, including large companies such as BlackRock, GE Capital, Real Estate, Invesco, and others. All of these large firms are engaged in extensive private investment activities. Yet Treasury has refused to require these firms to establish firewalls between their employees and who makes investment decisions on behalf of the government and those who manage private funds. Why My question is, why does Treasury oppose firewalls at these firms to prevent conflict of interest and collusion?
We have been pushing this recommendation over the last couple of months. We've consulted with the Federal Reserve Bank of New York, which operates similar programs. They have asset managers both buying and selling assets. And even Treasury itself, we've taken a look at some of their programs. And one constant is that when asset managers receive market-moving information and have the ability to or know about information to set market prices, a firewall comes attached to that responsibility in every program other than in the PPIP program. We've made this recommendation. In our quarterly report, Treasury has detailed, I think in a lengthy letter, their explanation as to why they're not requiring this. In short, they say it's not practical in this program for a variety of different reasons. We strongly disagree. We think that the taxpayer is entitled to the exact same protection that the Federal Reserve requires when it hires an asset manager, and we believe the same protections should and must be part of the TARP program.
Is there a downside to this? Is there a downside?
Treasury argues that they make a number of different arguments. One is that it may be more expensive, that there may be a limit as to the firms that are willing to participate absent a wall. All of these may be valid arguments, but from our perspective, when tilting the scales, are the tremendous dangers that come from not having a wall, from being able to take advantage of conflict of interest to wildly recognize profits in different parts of the firm, to the reputational risk. People are going to ask the question, why does BlackRock operate under a wall when they're managing funds for the Federal Reserve, but not when they're managing for the Treasury? And if there are incredible profits, there's going to be a lot of explaining that needs to get done.
Let me, I find your testimony quite amazing. Do I understand you correctly? Well, let me put it this way. Does Treasury ask TARP recipients what they are doing with the money? Do they ask them the question?
Overall, no. They've asked, Bank of America, Citigroup, and AIG are the only capital recipients that are required to report the use of funds. Some of the other extraordinary assistants also have reporting requirements. But as far as the rest of the recipients, Treasury says no. And they say they won't do it because it won't be meaningful. It won't be reliable information. So, of course, the question we ask is, if it's a meaningless exercise, why are you doing it with respect to Citigroup, Bank of America, and very recently AIG? And we haven't really gotten an answer to that question.
I think it's very, very important because, in creating this in discussions early on, it was about job creation. And, of course, I think that we need to have the information determined in terms of what they're doing with it, because when I look at the fact that in the minority community that the unemployment rate is 15.5%, and of course it's running 9% generally, so it appears to me that that's a legitimate kind of question that should be raised, because we feel and recognize that job creation is important.
Of course, Mr. Chairman, I couldn't agree with you more. And what Treasury does is it puts out lending survey information. So it's already collecting information from each of the financial institutions reporting on lending. But as our audit demonstrates, that's only part of the story. It doesn't talk about all the other things that banks are doing with TARP funds: investments, retaining capital cushions against future losses, all these types of things, which goes right to the heart of the question that you're posing.
Yeah. Let me ask you, did the TARP recipients have any trouble telling you what they were doing with the money?
We had a variety of responses. We had 364 responses, but nearly every single financial institution was able to provide us with meaningful information on this survey. And I have to remind you, this is a voluntary survey. What we're recommending is that Treasury actually require this information. But we just asked, and we still got very meaningful responses.
Is there any reason why the public should not be told what is happening with the TARP money, how it's being used?
I can't think of one. The one argument that was presented to us was that it would be a meaningless endeavor. I think our audit report proves that to be false. I think that banks can and should be required to report on their use of funds. I think that this Congress can make better policy decisions. Frankly, I think it will assist the Treasury in making better decisions if they have a better understanding of what's being done with funds as we continue in the bailouts and the continue of the administration of the TARP.
Thank you very much, Mr. Barofsky. Yield to the ranking member.
Well, Mr. Chairman, before I begin my questioning, I'm not sure that everyone understands that you came here on a day when others probably would have taken the day off. Mr. Chairman, is it actually true that today is your birthday?
Thank you. Thank you. Thank you very, very much.
That's the power of a chairman if I've ever seen it.
Thank you so much.
Well, the coffee will be coming, Mr. Chairman.
Thank you very much. I appreciate that.
Now,
thank you.
Mr. Chairman, just in case anyone thinks this isn't a bipartisan committee, Jimmy Duncan has decided to have his birthday today just to make sure there was one on each side. Yeah, do your part. And the chairman blew it out without even showing it. It's much harder as you go down the dais. Thank you, Mr. Chairman, and your coffee is coming. Mr. Burr, I'm not sure that I can begin to tell you how pleased we are to have you here today. And we're pleased for a number of reasons, and I'll read from that New York Times article, if I may. Andrew Williams, a spokesman for the Treasury Department, called the figures distorted because they did not consider the value of collateral posted on these loan programs. I'd like you to put into perspective, first of all, did you ever say anywhere in your report or in your findings that we would lose $23.7 trillion?
Of course not. And we explicitly point out in the report the existence of collateral.
So when you talk about 23.7 trillion, or about 30 times as much money as you would have if you gave away $1 million a year from the birth of Christ till today, just for somebody to try to figure out if that's true or not, that quantity of money, what you're talking about is the amount, other than the $700 billion, the amount that's essentially under assurances and insurance. Is that right?
If every program is maximized to the greatest extent possible, that's what that number is. And coming from a slightly different persuasion, I would say even if you went back to the time that Moses parted the Red Sea, you would still be in the right numbers.
I think actually Abraham would be sitting here trying to figure it out too. There's no question. This is an amazing amount of money that when you look at millions over thousands of years and not getting to that number, it's hard for people to understand. But let's look at it another way. If in fact just 5% of this 23 trillion, 24 trillion under assurances of various sorts were to go bad, isn't that a dramatic amount more than we ever authorized or appropriated from Congress?
It is of course a staggeringly large number. The TARP itself are staggeringly large numbers as they've been expanded through other programs as well.
Now, a previous Neil came before us, Neil Kashkari, and we asked him about how much money the assets were worth, and he said he didn't know, but he'd get it to us in 30 days, and 30 days later he said he'd get us another 30 days. He's gone now. So you're the one we have. Has the Treasury been willing to cooperate and provide the information as to the current value of assets purchased? This is a recommendation we've made since early February, and they've not yet made this information public. So the assurances made by Neil Kashkari, both in the last Congress and in this Congress, that this was forthcoming, in fact, were not truthful in the sense that it doesn't appear as though they were ever forthcoming to actually tell us in a, if you will, a mark-to-market, what the assets are worth. Particularly, I'm interested in AIG's assets. Do you have any idea how much money has evaporated permanently from the $180 billion that AIG has received? I don't have that information at my fingertips. We're doing a couple of audits on AIG where we're going to have a better sense and be able to report on what's going on in those portfolios, particularly in the context of its counterparty transactions, but I don't have that information. Do you think that Congress is overdue to find out how many dollars have gone out in a manner that can never be refunded? I think it's absolutely essential for transparency that Congress and the taxpayers who invest in this program know what Treasury's best estimate is as to what the value of their investment is. Absolutely. Now, because we own AIG, and because there is litigation against the founder of AIG, and you're obviously very familiar with the court decision, and apparently follow-on litigation, do you have any day-to-day contact or any ability to find out why we continue to spend, my understanding is over $200 million in legal fees, trying to recover initially $4 billion, which the court has said we're not entitled to get back from CV Starr and Company. As a matter of fact, apparently they said it in very short time and said that, you know, essentially the case never had merit, but we've spent over $200 million. Is that something that's on your radar screen?
We haven't addressed that situation. We have 2 ongoing audits of AIG, which is consuming a good chunk of my audit staff. But of course, we're always going to be continuing to look for follow-up aspects. We're also, though, may be included as well in an overall audit that we just recently announced. We're doing on corporate governance as a whole, including the government's role in governing and as part of an 80% owner of AIG. So it may come in that context as well.
Is there any way that we can get an independent assessment of whether or not the federal government's pursuit of these lawsuits, rather than going to binding arbitration, which was offered repeatedly when Mr. Greenberg was before this committee, is there any way to guess this as $1 million a week is being spent on legal fees?
I think what we can bring through our audits is an explanation of what the federal government's involvement has been in those decisions. In other words, as an 80% owner, how involved is the federal government in making those decisions versus AIG's management itself?
Okay, now back to the firewall question that you've been working on and this committee is very concerned about. I'm a member of a public board. I own stock. Actually, my foundation owns stock in that. I'm not allowed to trade that during blind periods. Is it any different to say that a member of Congress who happens to have a foundation which owns stock but also sits on the board as an individual, that would you say that was unwielding to say, no, you can't trade on behalf of yourself? Well, in fact, you have inside information. Is that any more hard than what you're dealing with various firms who are being given huge underwriting and huge leverage advantages at the federal government's expense in return for trading primarily on our behalf?
And I think that's exactly the right difference. Is here these fund managers can have up to $3 billion of taxpayer money, and the whole design of the program is to encourage them to set prices in an illiquid market. This is a remarkable amount of power, and once they make that decision, it's a remarkable piece of inside information. I think that would be difficult for any member of Congress to replicate, because they're actually, the design of the program is to set prices. So I think it's a far more extreme example in the example of the PPIP.
Thank you, Mr. Chairman.
Now yield 5 minutes to a gentleman from Maryland, very active member of this committee, Congressman Cummings.
Thank you very much, Mr. Chairman. Mr. Barofsky, it's good to see you again. Have you had a conversation with Mr. Geithner since you took office?
I spoke to him in late January.
And that's it?
That's it.
For how long was that conversation?
It was a couple of minutes before a larger meeting with Mr. Dodaro and Ms. Warren from the Congressional Oversight Panel.
The reason why I asked that question is, as I listened to the chairman's questions and our ranking members, it seems to me that you all should be on the same team to a degree. I mean, I know there's a wall there, but I guess, you know, a lot of the things that that are coming up should concern all of us. And I want to follow up on some of the chairman's questions. You said a moment ago that you got 12 million hits. That's a lot of hits to your system. What that means is that apparently the public is very interested in what's going on with regard to this money. And I think the thing that concerns me is that something that you had said in the Joint Economic Committee not very long ago was your concern about the appearance of some conflicts. Do you still have those concerns?
I think my concerns are greater today than they were a couple of months ago when I spoke to you in the Joint Economic Committee.
And why do you say that?
Because of the absence of walls in this public-private investment program. I think that the danger here of the perception of picking winners and losers, of giving these 9 economic firms, 9 out of the 100 that applied, the ability to set prices and not put the right type of restrictions in place to make sure that they're not going to otherwise profit unfairly at the expense of the market. If these firms do start having those types of profits in other aspects of their firms, I think the criticism that has previously been leveled at Treasury, the picking the winners and losers, the opaqueness of how decisions are being made, could be potentially devastating to the program and potentially devastating to just the way American people view their government. So it's a very serious concern of mine.
This morning on Morning Joe, they had a fellow named McDonald who's written a book, and he used to work for Lehman Brothers, and he alleged that Mr. Paulson intentionally allowed Lehman to fail. Now, normally I wouldn't pay too much attention to that. But what we are beginning to see is, and then he laid out the evidence, and it sounded pretty logical. And I think that when we start getting in these, and the reason why I mentioned the 12 million hits is that, and I really believe this, in order for us to get past this economic situation that we find ourselves in, the public has to believe that we're doing the right thing. And they have to believe, and I think one of the things that make them believe is transparency. I agree with you on that. And so I'm trying to figure out, you know, and there's one thing, and one of the things that I'm concerned about is a lot of times when we see a report that doesn't look too favorable, a lot of times we have a tendency to shoot the messenger and not address the report. But there's one thing that you said here that's quite telling. As a former prosecutor, and I guess you're still a prosecutor now, you said something about 35 open criminal investigations. And I know what it takes to even get to the point to start even investigating. Let's assume only 5 of them have some legs on them. I mean, are you seeing any kind of pattern? And I think what my concern is that if there is a pattern, maybe this Congress needs to be doing something, and I'm trying to figure out, is there anything that we need to be doing to give you more power than what you have to accomplish the things that you have to accomplish? Because one thing is for sure, if we cannot get to a point of the American people at 12 million hits, if we can't show them that we are doing the right thing with their money, as the chairman has alluded to, we're going to have problems. I don't see how we can get past this, because the American people are not going to buy it.
No, and I couldn't agree with you more, the importance of transparency for all the reasons that you stated, as well as just the fundamental fact that the taxpayers are the investors. And I think the reason why we see 12 million hits and more than 700,000 downloads of our reports is because the American people want to know what's going on in their investments. They want to understand these programs, and we serve a role basically to translate these programs from the very, very complicated descriptions that Treasury puts out, and we try to translate it into English with tutorials and explanations. So I do agree. As to your question about the criminal investigations, we haven't seen a major pattern. We have a lot of investigations related to the mortgage modification. There's a lot of scams out there, people trying to take advantage of struggling homeowners, so there's a fair number there. But the rest of the investigations really go across the board. We have some incredibly complex securities and accounting fraud investigations of banks that either have attempted to or actually applied for or received TARP funds that may have lied to the government in order to get that funding. We have cases of insider trading on inside information they may have learned about the TARP. Really, almost any type of white-collar crime you can think of, we're touching on our investigations. It's what you would expect when you're putting so much money out on such a short period of time, and many instances with very few conditions. And they really do cover the board.
Thank you very much.
Thank you very much. I yield now to the gentleman from Florida, Congressman Micah.
Thank you. Thank you, Mr. Barofsky. Let me follow up on Mr. Cummings' questions. Actually, you stated that TARP and these programs have grown into more than 50 programs, 50 different programs?
Not within the TARP. Within the TARP, there are 12 programs. In our report, we talk about approximately an additional 50 programs that are across the United States government, everywhere from the FDIC to the Fed to FHFA.
So there are about 12 TARP, but 50 that are you keeping sort of a watch over, or just the 12 TARP?
Thankfully, we just have the 12.
Okay.
The rest are being
Well,
are in
again,
other agencies.
Some of this seems to have dramatically expanded, and probably the nature of the responsibility required some of that. But to get to the point Mr. Cummings was raising, do you have enough resources to conduct sufficient investigation and oversight?
Well, we are building as an office. We currently have 70 personnel on board. We're building to about 160, which a target date of early next year.
I read your, not all of your report, but scanned through it, and you do have recommendations in here. I noticed only 8 of 32 of your major recommendations have been implemented, and then 5 of 32 partially implemented. Is there any way to enforce implementation or to get us, do you have any recommendation that we can put some teeth into what you're doing or recommending?
Really, we feel like our role, our statutory role, is to make these recommendations, and that's really for...
we have to pick up the responsibility. But it appears that a number of your recommendations are not implemented, or it appears that some of your recommendations take a while to get implemented. For example, executive compensation, was that, I guess that was finally adopted, a rule June 15th?
That's correct.
So that's why we've seen since June 15th a lot of folks interested in paying back their loans?
I think that is an explanation that's been offered.
Okay, but it took us, what, 6 months to get that in place, that recommendation implemented. Is that correct?
I think it was about 4 months from our February report.
Mm-hmm. Then I think part of what you said is you're trying to develop and encourage transparency. Many of the things that deal with transparency are recommendations that have not, in fact, been addressed by the various groups that you oversee. That still remains the case?
It does.
That's unfortunate. And then maybe finally you could tell me, first I didn't vote for it, but we started out with about $700 billion that members of Congress thought that they were going to help bail out financial institutions. And then you said it grew, some of the liability grew to $3 trillion. Maybe you could explain that. Then $4.7 trillion. And then the total exposure is $23 trillion. So how did a little tiny, teeny $700 billion program balloon into $23 billion worth of exposure? And maybe you could tell us the $3 trillion you cited level, how far we're at risk at that, 4.7, and 23 is the ultimate.
Sure. For the TARP, we start off with $700 billion, and we include a chart that gives the precise numbers for each program and where they come from. But then that number got expanded to approximately almost $3 trillion from other related federal government programs. So, for example, the public-private investment program, which we've been discussing, is seeded with about $100 billion of TARP money. But then the Federal Reserve, and at one point the FDIC, were going to issue non-recourse loans from the Federal Reserve, that is, loans that don't have to be paid back but are posted with collateral.
So that ballooned it too.
Right, and then also guarantees from the FDIC. You have the TALF program, which has been an up to $1 trillion program, seeded by $80 or $100 billion of TARP funds. So you have these other federal government entities coming in and supplementing these programs. You have an asset guarantee of $300 billion from Citigroup, which is done partly by Treasury, partly by FDIC, and partly Federal Reserve. So that's how we get to the $3 trillion. Those other numbers are actually non-TARP programs, or the $3 trillion actually, in the 23.7, it does include the $3 trillion from the TARP, but it also includes other programs that have nothing to do with the TARP, other than the fact that they are also supporting the financial industry, and other than the fact that the same institutions that can take advantage of the TARP also can take advantage of these other institutions, and at times can use one perhaps to pay off another. Something we call, it's something we've been coined as this bailout arbitrage.
So $700 billion seeded the potential of $23.7 trillion.
I would say the 700 seeded the $3 trillion, and then the other $20.7 trillion really comes from other federal government programs that are non-TARP related.
Riding sort of the saddle, the same saddle?
All for the support of the financial system.
Will the gentleman yield? Will the
Gentleman's
gentleman yield?
time-
May I
gentleman's time
just
is
ask,
expired.
Mr. Chairman?
Gentleman's
Is
time
that in your report, sir? Is that what you just stated to Congressman Mica's questions? Is that summarized, that stair step?
Yes, the $3 trillion and what is there is featured in a chart in the executive summary.
Up to the 23?
And all of that is set forth in Section 3 of our report with the explanations of what those numbers really mean.
Thank you.
Right. Gentleman from Ohio, Mr. Kucinich.
Thank you very much, Mr. Barofsky. Excuse me. I'm reading your report about lending, where you talk about how banks have been leveraging TARP funds to support lending activities. And you say on commercial lending, 20% of respondents reported they used TARP funding for commercial lending activities. 17% of respondents deploying TARP funds for other consumer lending. 13% for small business. You talk about the capital cushion, how some banks are basically parking their funds to create a cushion against loan losses. Now, I looked at your report, and I want to use that report as a backdrop for a news report that came in today. Now, we went back into the TARP history here. We know the first intent that Congress had, purchase toxic assets, which were mortgage-backed securities. We were told, keep people in their homes. Well, the administration threw that out the door, last administration. Then we were told, we're going to switch the TARP funds to help bail out the banks, direct capital infusion. But I think something else has happened here, and I want to make sure it doesn't escape this committee, and I hope that you can tell me it hasn't escaped your notice. We're now seeing that we have another switch that's occurred, that we actually have the Fed paying banks not to use their, quote, excess capital to make loans. I direct your attention to a news report today, which says that banks' excess reserves at the Fed rose to a record $877.1 billion daily average in the 2 weeks ended May 20th, from $2 billion a year earlier. Excess reserves, money available for lending that banks chose to leave with the Fed instead, averaged $743 billion in the first 2 weeks of this month. Sir, the Fed is paying banks higher interest rates now to keep their funds parked at the Fed instead of loaning the money to the American people. Is that not true?
Yes, and the reason I opened up the book is that on page 142 of our chart, of our report, we actually have a chart that depicts exactly what you're saying.
Tell me about the chart, and tell this committee about that chart.
It shows the increase in the amount of money that's being parked at the Federal Reserve over time. We link it to one of the Fed programs, a different program, but another program that we do think that there is a connection between the federal programs and the increased reserves that are being held there.
If the banks had not received this direct capital injection as a result of the TARP funds, is it conceivable that they would have, according to this news report, averaging $743 billion in reserves parked at the Fed? Is that possible they could have had that?
It may be, but only because of all the other programs that we detail in Section 3 of the report.
All the other programs, meaning government programs that
Yes.
have helped to sustain the banks, right?
It would certainly appear to be the case.
See, members of the committee, first we started out with being told that money was going to mortgage-backed securities. They did a bait-and-switch on that. Then we're told it's being used to bail out the banks so we could have a loosening of credit through a direct capital infusion. Now, you and I know that there are businesses in our communities who are credit-starved. Meanwhile, the Fed is paying banks a premium to keep their money parked at the Fed instead of loosening it up. This is one fraud after another on the American people. Now, they might use the excuse, well, they're trying to control inflation. Check it out. Unemployment's skyrocketing. Businesses can't get money, so they're laying off more people. And we're thinking that somehow we've solved the problem here. I want to submit for the record this report out of the Bloomberg News Service, and I want to ask Mr. Barofsky.
Without objection.
Thank you. I want to ask Mr. Barofsky. This money's fungible, as we know.
Yes.
But generally speaking, you would agree that there's just no question that a significant part of the money that's being parked at the Fed right now is government money, that money from these government programs that Congress created.
I mean, I think we'd have to look institution by institution, but I think if we did so, I wouldn't disagree with what you're saying.
Yeah, Mr. Chairman, I hope that we can get another hearing on this particular matter, because this goes to the heart of the entire bailout program. One thing after another, one bait and switch after another.
And Congressman Kucinich, in our audit, I think we described, the banks have communicated to us this tension as well, that they feel, that's really right in line with your comments, and that is that on the one hand, they're getting pressure to increase lending and get this capital out there, but they're also getting pressure from the regulators to maintain the capital and increase their
regulators
capital cushions.
Read Fed.
The Fed and FDIC, OCC, and OTS, and indeed that's what a portion of the stress tests were. So I think that is a very real dichotomy.
I thank the Chairman. I thank the Chairman.
Thank you very much. I now yield to gentleman from Tennessee, Mr. Duncans, and happy birthday.
Well, thank you, Mr. Chairman. Happy birthday to you, too. Mr. Barofsky, thank you very much for your report, and I read with great interest the story in the Washington Post yesterday where the lead paragraph says many of the banks that got federal aid to support increased lending have instead used some of the money to make investments, repay debts, or buy other banks. I read at one point that back a few months ago that the Bank of America had taken $7 billion of the first $15 billion they got and increased their
Mr. Chairman, we can't hear our colleague, and it's important that we hear him.
Your mic on?
Yes, it's on. Maybe I'm not close enough.
Okay. Right.
Does that help?
That helps.
I read that the Bank of America took $7 billion of the first $15 billion they got and increased their investment in the Construction Bank of China. I don't think any of us ever intended that this money be spent in that way. And I think a part of the problem is that this legislation was rushed through and we weren't given proper hearings on it or a chance to offer amendments and things like that. But I can tell you all of the business people, all the small business people in Knoxville and East Tennessee have been telling me for months that what's being said at the top is not getting down to that level, that what the President and the Secretary of the Treasury have been saying under both administrations, where they're saying lend, 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 that these examiners on the local level are saying no, no, no. And in fact there was a cartoon to that effect in the Congress Daily publication that we get every day at each of our offices, showing the President and the Secretary of the Treasury urging the banks to lend and showing the banks with huge piles of money, and then these examiners on the local level saying no, no, no. And I've heard that from realtors, home builders, other small business people, bankers, from all lines. But I want to read a portion of a letter I received from Robert S. Talbot, who has been one of the most successful business people in Knoxville. He wrote to me, he said, "I've never seen anything like this in the almost 30 years I've been in the business world." And listen to this. He said, Whole Rob Investments, that's his company, is the mother company of over 50 partnerships and limited liability companies, all of which are involved in commercial and residential real estate projects. We have been in business for many years and currently own interests in 18 shopping centers and numerous other retail and residential properties. Our loan obligations consistently are in excess of $100 million, and we have multiple lenders with which we do business, large life insurance companies, regional lenders, banks. We are not currently in default with respect to any monetary obligation, nor have we ever been. Our business depends on access to credit, and despite public protestations by our government to the contrary, it has been our experience this year that credit is contracting. We have been told by numerous banks that unsecured lines of credit to developers are being frowned upon by bank regulators, and consequently we have been informed by SunTrust, Mountain Commerce Bank, and First Bank that they would not renew personal lines of credit. While Fifth Third did not technically extinguish our line, it was apparent to us that they did not want our business and consequently were in the process We are in the process of extinguishing our lines of credit with them. This is what I'm hearing, except this is a stronger letter. But is this what you've been finding out in your investigation of all of this? Is this true of around the country, or is my area unusual in this regard? Because I'm hearing this from many, many people.
I think this tension does exist. I think we've seen it across the board. This, on the one hand, the desire for banks to do more and more lending, and on the other hand, the regulators' desire for banks to build up capital cushions against future losses, and it's a very real tension.
Well, and I also hear I've heard this from many bankers who say that they can't speak out publicly because they'll receive retribution from the examiners, and the situation will grow even worse.
Well, we did see this in response to some of our survey questions. Banks, our source of information for this is the banks themselves, who have come forward and have pointed out this tension. And it's also, frankly, it's natural. The stress test, and part of the results of the stress test was to encourage the financial institutions to raise additional $70-something billion. These additions to capital they're additions to capital. Now, capital can be leveraged in certain instances to increase lending, but there is a tension there, and it is one from conflicting policy concerns.
I've written the top banking regulators twice to tell them, and those two letters were several months apart, to tell them that this situation is occurring in our area, and I hope that other members of the committee who are running into this in their areas will also write these regulators, because this money is not being used, I don't think, in the ways in which the Congress really intended for it to be used. Thank you very much.
Thank you. I now yield to the gentleman from Illinois, Congressman Quigley.
Thank you, Mr. Chairman. Morning. You, sir, you spoke of the extraordinary power placed with the fund managers. But I think you have more faith in the firewall system than others do. Given this extraordinary power, almost life and death over so much money and what can happen to other companies, are firewalls enough? I guess there are firewalls and there are firewalls, but is there anything else that can be done to protect the trust that's put in them?
A firewall enough standing alone would not be enough. There has to be vigorous and strict enforcement and compliance regimes set up over that firewall.
By whom?
It should be both by the company itself within their internal functions, and of course by Treasury. Our baseline suggestion, where we thought the starting point should be, and just as a starting point, should be what the Federal Reserve Bank of New York does with BlackRock and its Maiden Lane facilities, and with its 4 asset managers in its mortgage-backed security buying program. We thought that would be a good starting point, because they do have walls, they do have vigorous compliance set up by FRB and Y compliance, and that's a starting point. But it isn't the ultimate goal. We haven't gotten to that starting point, and that's why our recommendations are where they are. But no, we agree. A wall standing alone isn't going to do it if there's not a vigorous compliance regime in place as well.
Were you aware of whether these conflicts were discussed when Treasury made these decisions of choosing the 9 out of the over 100?
Our involvement, we were not involved in the formation of this program before it was publicly announced. We learned about it really a couple days before it came out. We became involved during the selection process of the 9 managers. One of the members of my audit team actually sat in on some of the interviews, and we've been engaged in a dialogue with Treasury, a back and forth on this issue since at least early June.
And did the discussions of the conflicts of interest and protections that were needed, were those discussed after the fact to you?
We've been engaged in an ongoing dialogue. There was an amendment to one of the housing bills. It's called the Ensign-Boxer Amendment because of those 2 sponsors that actually required Treasury to consult with us in the formation of these rules, and they certainly have abided by that, and there has been constant consultation, not agreement, but consultation.
Do you have the authority and the desire, I guess, ability to audit Treasury's decision-making process to pick the 9?
We certainly are going to be doing an audit on the conflicts issues and many of the issues associated with the PPIP program. We haven't announced it yet because the program itself hasn't gotten.
Go ahead and do it now.
Hasn't had liftoff, but we are going to do that. I think, frankly, there would be no way for us to do our job without auditing.
Well, given the lack of cooperation that you're facing now, how is that audit process going to work?
I would have to say that when it comes to conducting our audits, Treasury has been cooperative. They've provided the documents that we've asked for. They've made their personnel available to us timely for interviews. So I see no reason to worry that we're not going to be able to conduct our audits as we've conducted our other audits without interference from Treasury.
Do you suspect that that could be completed by the time you do your next quarterly report and repeat all your recommendations again?
I think that by our next quarterly report, because of the timing of the PPIP program, I mean, the final contracts haven't been written. The time the fund managers are being given to raise the funds is up to 12 weeks, which would take us into the next quarter. I think it's unlikely. We could do we may be able to do something very quickly, depending on what the time frame of the program is. But until sort of all the terms are set and the conditions are set, it's difficult to launch an audit. But we are going to do so.
Very good. Thank you, Mr. Chairman. I yield back.
Thank you very much. I now yield 5 minutes to Mr. Shaffer.
Thank you. Mr. Chairman, I would ask unanimous consent to insert into the record the letter that was referenced in Congressman Duncan's questioning. He'd like to have this submitted into the record.
Without objection, so ordered.
Thank you, and thank you for being here. I appreciate your work. This is important work. Taxpayers' money is at hand, and we have a role and responsibility in government to make sure that it's dealt with in a responsible manner. My understanding is that Treasury has formally asked the Office of Legal Counsel and the Department of Justice to opine on whether SIGTARP is subject to the supervision of the Secretary of the Treasury. Can you give us an update as to where that's at, your understanding of that?
My understanding is that's where it is. Treasury put in their request. We put in our response, giving our opinion that the intent of this Congress was quite clear, that we be a strictly independent agency within Treasury. They've submitted their response to our response, and the issue is still pending.
Other than they're trying to get maybe away from the obligation that SIGTARP puts upon it, have there been any further instances of Treasury attempting to exert control over your office or investigations?
Nothing that even comes to mind. I think that they've generally been cooperative with our investigations and audits.
And what would be the implications if they were to have control over?
Well, I think that in the IG Act and what Treasury suggests that we fit within that scheme, the Secretary of Treasury has the ability to shut down an audit or an investigation of the Treasury IG. And we have a great fear. We think that would be a great threat to our independence if the Secretary had that ability over us. I mean, by way of an example, obviously the Treasury has very strongly worded about portions of our report that they disagree with. Theoretically, could they use that type of supervision authority to order us to keep that out of the report and keep that information from the American taxpayer, from members of Congress? I'm not sure, but we think that those are the types of dangers that we see if we're under the supervision of the Secretary. If that type of authority was asserted, I think that would be a direct threat to really the reason why we were created.
Well, and I concur with that. I would hope that you would let this body know, and me in particular, if there's any instance or movement towards them trying to exert the control. I think that natural tension of having an independent auditor come in is a healthy one for the process and the viability and the visibility to the American people. Let me talk real briefly about the personnel and resources that you have in place. And the question is, do you need more resources? My understanding is that at the end of June you had 60 personnel with plans to get to 160 people. You have 35 ongoing criminal and civil investigations and over 3,200 tips that have come in through the hotline and whatnot. Help me understand what's happening within your department and the stress and workload with the personnel that you do have.
We've been very busy. We've put together a really amazing team of auditors and investigators who are,
what are you short? What do you need immediately that you don't have at your fingertips?
I think right now we're just going through the normal process of hiring, of finding the right people. The one thing that we identify in our report is that we're projected to basically run out of money mid-time through fiscal year 2010. We have a budget amendment request to Treasury to get the necessary money that we would need to keep going through the end of fiscal year 2010. We've been working with them to achieve that, as well as OMB. Obviously, if that is unsuccessful, we'll have to come back to Congress and ask for a direct appropriation. But basically, assuming that we get that necessary money, will be good through fiscal year 2010.
In my short time that I have left, let me totally shift gears and talk about the value of the TARP portfolio. There's very limited exposure to this. Tell me what you're able to see, not see, and what is the value to the public in having that information?
Well, we think it's essential from basic transparency point of view for the members of the public, the investors, to know what their investment is worth. I think we think of...
But how hard would that information be to provide?
Treasury is getting monthly estimates right now. So it would just be a matter of
they have the information, but we don't.
Making that information public.
It's just a matter of flipping the switch. I would urge that this committee, I would hope that we would insist that those valuations be made public so that the taxpayers can understand the valuation of their assets.
Would the gentleman yield?
Yes.
Is that something that, in fact, you believe would be appropriate for us to consider subpoenaing undercover so that we could at least see what they see once and maybe reach the same conclusion you've reached? Thank you.
I don't think it's necessarily my position to suggest what the committee should or should not subpoena, but certainly if the committee wanted that information, the committee certainly should request it and evaluate it and make its own determination.
I see my time is up. Thank you, Mr. Chairman. Thank you.
Let me just say that that's something that we are considering as well. Right. And now you have 5 minutes to the gentleman from Virginia.
Thank you, Mr. Chairman, and let me add my voice to happy birthday and good felicitations, and I want to thank you for your leadership of this committee. Welcome, Mr. Barofsky.
Thank you.
Let me ask a question. Just warts and all, is the TARP program working? Has it in fact achieved the ends for which it was designed?
I think that really depends on what your definition of working is. I think that the goals of the TARP have changed over time. Different folks have different definitions of what's working and what's not working. I think if the goal was to remove $700 billion of toxic assets off the books of financial institutions, that clearly has not happened. If the goal is to increase lending, I think that too, unfortunately, has not happened. If the goal was to avoid a complete systematic collapse of the financial industry, that may very well have happened. I think that it's impossible to look in the crystal ball and know exactly what would have happened absent the TARP. But from what we've seen, from what financial institutions have told us, we were on the precipice of a potential total collapse, and shoring up the capital may have indeed achieved that goal if that was a goal.
Yeah. I haven't been a big fan of TARP either, but I think you have to give credit where credit is due. I voted against the release of the second tranche, which was the only vote I got to have as a new member of Congress on TARP, because I didn't feel that the accountability and transparency standards were in place. The House, in fact, had a statutory framework to allow that, but the Senate didn't agree to it. But having said that, we were facing a systematic financial meltdown last September, were we not?
That is certainly what, in the conducting of our audits and gathering of information, that is an opinion we've heard many times from the top regulators as well as members of the industry.
And while the flow of credit may still be impeded, the fact of the matter is stability in the financial system, the stress test on 19 banks, for example, would seem to suggest that some stability has returned to the system that was lacking as recently as last fall.
I think we're certainly in a much different situation we were last fall, and it may very well be that the TARP is responsible for that, or responsible in part. Again, part of the reason why we do Section 3 and we talk about all of these programs is so that you can have in one place all of the different supports that were out there and that have been in place, and of which the TARP is only a small part.
Right.
So it's hard to, I think GAO has pointed this out, it's hard to say specifically whether the effect is from the TARP or from a different program.
But it might be fair to say that had we not had some intervention of some magnitude, such as TARP, we might have actually faced a much more serious situation.
That is certainly the opinion of the people that we've spoken to who were there at the time, including Chairman Bernanke and former Secretary Paulson.
Let me ask, $300 billion in TARP funding was invested directly in systematically important firms through the Capital Purchase Program, the Target Investment Program, and the Systematically Significant Failing Institutions Program. The Bush administration pretty much opposed giving the federal government a voting stake in banks in which the federal government made equity injections. Do you think oversight and accountability capabilities might have been improved if we had not resisted that
I'm sorry, I just missed the last part of your question.
I said the Bush administration, in making those funds available through those programs, opposed giving the federal government a voting stake in banks in which it made equity injections. Did we make a mistake in that respect? Could oversight and accountability have been improved, in fact, if we had a voting stake in those banks?
I think oversight and accountability certainly would have been improved if there were more conditions that were in place and if there were oversight triggering mechanisms that accompanied those conditions. There were very, very few conditions put on the initial output of funds. Whether that particular condition, I think that's a policy decision that increased transparency as we look and see what's happened, as we report, hopefully, and convince Treasury to give us an accounting on the use of funds. I think we can be in a better position to make that evaluation and by looking exactly what has happened. And that's why we push for transparency, so that you, the members of Congress, could make those determinations. You have all the information available to look back and say, hey, next time that we're in a bailout, what worked, what didn't work, what was the impact of the various decisions?
Well, let me give you an example. The Bank of America, which is now attempting to back out of the Federal Reserve's ring fencing arrangement. If we had insisted, as part of the $118 billion we pumped into BOA, that one of the tools would be to have a voting stake in BOA in return for that, would that be helpful from an oversight and accountability point of view from your perspective today?
It certainly would have an impact on the decision-making process, and that I'm not sure if voting in particular, from our perspective, from SIGTARP's perspective, what difference that would make, although it certainly would make a difference from Treasury's perspective in their ability to control the actions of these financial institutions.
Thank you. My time is up. Thank you, Mr. Chairman.
Thank you very much. Now yield 5 minutes to former chair of this committee, gentleman from Indiana, Mr. Burton.
Thank you, Mr. Chairman. I don't want to be redundant because I got here late, so I apologize if I ask questions that you've already answered. But why do you think the Treasury Department is dismissive of your calculations?
I don't know. I think that it's I hate to try to crawl into the mind of some of the comments that have been made. I think that if they had read the report in total and have read some of the charts and pages, they couldn't be saying some of the things that they're saying, their dismissiveness, their description of numbers that are inflated when all the numbers came from them. So I'm not sure.
You haven't had a chance. I've been told that you've only been able to spend maybe 1 or 2 minutes with Mr. Geithner since he took over. Is that right?
I had a several-minute meeting with him in January. It was followed by a larger meeting that probably went about 45 minutes that included a number of members of Treasury, GAO, and the Congressional Oversight Panel. That was on one occurrence in late January.
Did he take into consideration your comments and your positions? And
we didn't really have that much time in that one meeting.
Did you make some suggestions to him?
I think we conveyed where we were in late January. At that meeting, he actually announced to the press his adoption of one of our recommendations, which was posting TARP agreements on the Internet. So that was some progress that we saw at that time.
Well, the SIGTARP report to do you think he wants to keep any information from the people? You think there's a deliberate attempt to do that?
I'm not sure, again, of what the intent is. The effect is information that the taxpayers and members of Congress we believe should have as part of transparency is not being provided.
You said here, and you probably answered this already, but that the total potential federal government support could reach up to $23.7 trillion. Obviously, there's some speculation there, but the liability could reach that amount.
I think the speculation is if every one of these programs was fully subscribed to, that is the total commitment in guarantees. But I don't think there's a speculation as to what the numbers are. These are numbers that have been provided to us by the federal government. I mean, frankly, every one of these numbers, any member of the public could go in. It's all publicly available information.
Well, if even half of that is correct, we've got a big problem.
I think the important caveat which we set forth in the report is that we don't have $23.7 trillion outstanding right now. Right now the number outstanding is closer to $3 trillion. Since the inception of the crisis, again, as we put out in the report, the total maximum amount has been about $4.7 trillion. But when you add up all of the different programs, including programs that have been paid back, including ones that may have been canceled, including collateralized programs, the total amount of support, which is what we're trying to capture here, does total $23.7 trillion.
You know, we're concerned about the terrorist problem. That's one of the top issues that the American people are concerned about. And I understand SIGTARP has recommended that Treasury require its private fund managers to collect information on whether any of their investors are involved in organized crime, terrorism, or fraud in order to prevent such groups from using PPIP to launder money. As currently designed, are you confident that the Obama administration has taken steps to prevent organized crime syndicates and terrorist groups from using PPIP money to launder?
I think they're most of the way there, but I think there's a little bit more that needs to be done. They are requiring these fund managers to use the normal procedures, KYC, and different procedures to screen for that information. What we've recommended and what they've not adopted is that Treasury not only receive all the information about all the different investors in these programs,